Good morning, everybody. Today, the 20th of December 2012, I would like, on behalf of all staff of Talk Financial, to wish all of our clients, alliance partners, colleagues and friends a very happy Christmas and a successful and healthy 2013. I thought that today it would be appropriate to provide just a few little snippets of investment commentary on the year that was. And we expect that 2012 will finish out positively for most investors, which clearly is a thankful reprieve from some of the losses we've had in past years, in terms of global equity markets in particular. But 2012 will return positive growth for many stocks and shares and equity-based investors, albeit not without its own trials and tribulations. Quarter one, for example, was very positive. Quarter two negated most of those gains. Quarter three largely flatlined, and quarter four will be reasonably positive as well. But all told, for those people who had the patience and the risk attitude to remain invested, they will come out positive in 2012. And I think that therein lies a very important message for 2013, and that is not to try and time the markets in terms of growth and retraction, because it's a very difficult thing to do. If you were instead to remain invested and to understand the profile of investing and the risks and fluctuations and the volatility that clearly exist, patience would certainly have yielded its own reward to those people. So the real issue is in investing money in 2013 is to understand the risk, understand the volatility, be comfortable with those positions, and remain invested and remain patient. In terms of 2013, we would see that there are opportunities to invest. A number of fund managers and investment analysts that we would have spoken to of late all seem to share the same consensus that the stock markets generally reflect reasonable value. And what that really means is that we don't expect any major jumps in value, nor do we expect any major collapses in stock markets overall. Obviously, notwithstanding a major shock to the system, for example, the collapse of the euro, or if the fiscal cliff in America became a reality, whereby Barack Obama's budget in January 2013 was to fail, for instance. But notwithstanding a major catastrophe like that, the market seemed to be expecting reasonably steady growth in 2013, perhaps high single-digit growth, and of course with the return of dividend payments for many funds and for many companies as well. We would also suggest that there's opportunities to invest in corporate bonds in 2013 for as long as credit flow remains very tight. Blue chip, strong international companies still require cash flow and they still require financial support in order to run their business. And for as long as the banking system is very slow to release funds, those companies can raise money on the corporate bond market through pension funds and private investors and so on. And we would be of the view that they represent a good opportunity for people who may want to invest in a moderately exposed risk structure, but perhaps not to invest directly in equity markets. Corporate bonds, we believe, would be a reasonable place to be for that type of investor. And certainly corporate bonds are much more appealing today than government bonds are, whereby we feel that sovereign debt is going to put a strain on the delivery of some government bonds over the next 2 to 3 years. We would also suggest, probably though of critical importance, is anybody who is investing in 2013, where possible, to have a diversified approach to your investing. Equity markets seem to represent reasonable value for money. The euro currency, in our view, is not going to collapse. If it was to collapse, it would have done so in the first 6 months of 2012 during the peak of the crisis in Greece. We believe that a deal needs to be done in relation to Eurozone debt, a mixture of debt write-down and debt restructure. And therein lies a significant amount of pain, particularly so for the German economy, pain that economy is not willing to accept right now. But when they eventually accept it, we believe that debt restructure will happen and the Eurozone area will be saved, at least for now. Thereafter, consideration of greater fiscal integration undoubtedly is the way forward if the Eurozone is to avoid the future struggles that we've had in the past. But for now, it's Christmas time and it's the end of the year, and it's the time to relax and look back on the year that was, and hopefully enjoy the fruits of all of our labours, insofar as there are any fruits in the current climate, and spend time with our families and our children and our friends, and recharge our batteries before we start off again in 2013. So in conclusion, again, we would like to wish you all a very happy and a peaceful Christmas, a successful and healthy 2013, and thank you very much for all of your support all year. It is very much appreciated. Until next year, thank you very much for your support. Bye bye.